Welcome back to Winning on Taxes. And just want to summarize what we've been talking about with the hardship status. And this economic hardship status is for everybody. Many people qualify. You don't have to be flat broke. You could have a good income and just have a lot of expenses. You could have a large family. You could be going through a divorce and be hit with a huge settlement or payment terms. You can still have assets and qualify for a hardship status as well. So too many people think that they don't qualify for any breaks because they have too much money, they're making too much money, or they don't think that the IRS will give them time to get on their feet when life happens. And again, it happens for all kinds of reasons. We're seeing government layoffs happen all across the country. It's affecting all kinds of people. And it's not just the government people that are being affected. All of the contractors, all the people the vendors around that dealt with all those people that are employed are going to get hit too. So again, right, whether or not you support it or not, it is something that's going to affect people that work with the government directly or indirectly and the larger economy. So whenever we have layoffs, shifts in industries, this can happen. And personally, sickness, death of a loved one, or loss of a business, loss of health. There's so many things that can affect individuals. And that's the perfect time to sit down, talk to a tax professional, and get some good advice. I can't tell you how many times I've talked to people and told them, look, I wish you would have come and talked to me a year or two ago. I could have helped you. I could have stopped the stress years ago, giving you that peace of mind, and set you on a path where you could feel at peace again. The IRS doesn't want to come after your home. They don't want to come after your cars. And believe it or not, given the right situations, they won't even come after your retirement accounts if you have those set up correctly or if you're retired. So there are plenty of ways to protect assets if you do it right. Be aware of tax liens. They're out there. When you owe, the state or the IRS can file tax liens pretty much anytime. So if you owe taxes and they're filed, usually it's not one thing that triggered them, but filing for payment plans where you're not full paying it or doing a hardship status will automatically trigger tax liens if they haven't already been filed. They just apply to buying, selling, refinancing real property. They can still be dealt with. You can still do all of those things, but you have to deal with the tax lien units at the IRS or state level, or both. Who to pay off first? Pay off the states. Get rid of them. Their tax debt sticks around for, in most cases, 20 years, and sometimes longer than that. And again, it's just a headache. You want to get rid of them so that way you can focus on the debt that is a lot easier to handle. So I put many hundreds, if not thousands of people in hardship statuses, and it made all the difference for them and their families. And if you have questions, give us a call, Guardian Tax Law PLLC, 520-485-7371 to get your peace of mind.